capital, and in today's tutorial it's going to be continuation. I actually envisaged today's class to be the last class we having on this course, but from my analysis you might see have one more class on this course, call it a wrap. Okay, so today we're going to be talking about balance sheet, the cash flow, and the income statement. I just want to talk about the sample, what is expected to be in your balance sheet, what are the things that are expected to be in your cash flow and in your income statements. So that's what we're going to do tonight. It's not necessarily going to be a long class, but I just have to do something. So our next class should be concluding with this course. Alright, I think just 2 more courses after this course, then we are done for the semester and we can talk about our revisions and the distribution of the keynotes and the TMA solutions for exam study. So let's just go straight into it for tonight's class. So we have BFN209, BFN209. So according to what we have on the thumbnail, okay, we have the balance sheet, the income statement, the cash flow statement. All these we have actually, they are not new to us. Something we have just a moment. Okay, so it's something we must have heard of one point or the at a point or the other. Okay, but want to talk about, want to go into details. Okay, there's something I have made mention of to us that we need to know that when it comes to financial statements, when it comes to our balance sheet, when it comes to income statement, cash flow, all these things are all financial statements used to making decisions, and it has to do with a lot of posting. So tonight we're going to start with the balance sheet. So, but just before we go straight into it, I have on the comment section Miss Tasha, good evening, it's good to have you on board. Miss Florence, it's good to have you on board. Miss Blessing, it's good to have you on board. And Miss Ajuma, it's good to have you all on board. So we have the balance sheet. So I'm going to be doing some posting and knowing what is expected to be in the balance sheet. So to start with, we have certain terminologies that you are expected to bear in mind or have in mind. Okay, but let's just continue. I believe we'll get to know that better. So we have Tasha Enterprise, or let's just say enterprises. So we have balance sheet. Okay, so now Tasha Enterprises balance sheet for what year and for what month? All right, for what year? So we have usually it's preferable to be done, once in a year. All right, so you have every expenses and every assets and investment, what have you, liabilities incurred for the year included. So we have Tasha balance sheet. We have 31st December, all right, 2023. Are we together? 24th December 2023. So now, to start with, we need to first put into consideration what we call the fixed assets. Okay, and can anybody in the stream tell us what fixed assets is? It's something we have talked about in our retrospective class. So if you are there, you can quickly say something about fixed assets. You are welcome. Okay, so let me just continue with this. So this should not take us up to a minute. What are fixed assets. When we say fixed asset, what are we talking about? So we have the naira sign. Okay. So we also have naira sign here. So just have naira sign here. Is N. Did I write BIN anywhere at any point? Is BFN. Is BFN209. Banking and Finance. BF. Miss Blessing, did you miss anything? Okay, so the question, what are fixed assets? Is anybody helping us with that? Okay, what are fixed assets? Is anybody helping us with that very quickly? Okay. Is anybody helping us with that? Miss Blessing, Miss Tasha, Miss Florence, are we all there? Okay. Okay, maybe I should just go ahead with that. This is something we have taught in the class. It shouldn't be a problem. Okay. Okay, I think somebody is saying something. Oh, Miss Ajima deleted it. So I'll just give us 5 seconds. Okay, I'll just yes. Wonderful. Thank you very much for that. Somebody thank you very much for that. That's on point. When we say fixed assets, okay, talking about items. Okay, like I said, assets are expected to generate income. Okay, Miss Alayoyomi says assets which are purchased for long-term use, yes, and are likely to be converted quickly into cash. I think she missed it up. We don't quickly convert long fixed assets into cash. All right, that's more of current assets. All right, but when we say fixed assets, all right, they have long-term, right? They have long-term. Okay, companies get them for long-term use. All right. Okay, yes, good examples like land, buildings, and equipment. Yes, thank you very much for that. And Miss Fatima says, good evening, you're welcome. Miss Ajuma says, yes, network is everywhere, ma. The general problem. So let's continue. So now, having spoken about fixed assets, so we are going to include in our balance sheet. Okay, so in our balance sheet, we are expected to have our fixed assets. So we have the first thing, we have fixed assets, and we have already cited examples of fixed assets whereby we have land and building, we have plant and machinery. Under fixed assets, we have land and building, plant and machineries, we have furnitures and fittings. So as well, we have motor vehicle, anything you buy to generate more money for a long period of time. Like myself, one of my fixed assets is my laptop. All right, my ring light, my laptop, all these are, to me, they are my access because I use them to I'll definitely be using them to generate money for a long period of time, for as long as possible. Maybe when they get bad, they may be replaced, but I'll use them for as long as possible. All right. So we have now, so as well we have current assets. So speaking of which, what are current assets? Okay, before current assets, we have immediately after fixed assets is being calculated. All right, immediately after fixed assets is being calculated, we have long-term investments. All right, this is also very close. Also very close to fixed asset. Investment definitely is also expected to yield income, interest, result at the end of the stipulated time. Okay, it's also expected to yield income or interest at the expected time. Okay, so that is also under fixed assets and is also very close. All right, so if there are any, then they are also calculated. So then after the long-term assets, we have the current assets. Okay, we have the current assets. So please, can anyone in the class tell us what current asset is? Okay, what are current assets? Let's talk to us. Anybody in class? I'm waiting for us to respond. Yes, current assets are cash and other assets that are expected to be converted now within a year. Yes, cash or other assets that are expected to be. Why Mr. Alayo and Mr. Juma? Are you people in the same place? This your answers looks very almost the same thing. I'm suspecting the two of you. Are you people in the same together? But thank you for the attempt anyway. Yes, thank you for that. Please, Miss Blessing, what's going on? You're not contributing to this class. That's unlike you. Are you there, Miss Blessing? Okay. Now let's continue. Yes, current assets. Thank you very much, everyone, for your contribution. Okay. Oh, wonderful. They are cash or anything easily changed. All right. Thank you also for that. So it's current assets. It is said that they are cash or cash equivalents. Okay. There are also inventories, marketable securities, or any other assets. All right. Or any other assets. Okay. Any other assets can be converted into cash within a year. Now you see the difference between current and fixed now. Fixed tend to have a longer period of time than current. The same thing goes with fixed with short and long-term liabilities. All right, we'll get to know more of current liabilities and we'll get to know more of the other. But let's just know that current asset and fixed assets differentiate them. All right, one thing that really differentiates is that this short lifespan and these are the longer lifespan. So I'm just going to highlight this so that we've covered that as well. Just a moment. Okay. Now, so you have your current asset. By the time you do your addition here, then subtracted, all right, from the total of the above. Okay, so we have that as that. So, and under, according to what we have in the material, under the current assets, you are expected to have things like your stock. When we say stock, we're talking about opening stock. All right, opening stock, closing stock, we do that a lot. You have your opening stock. We have debtors, sales or trade debtors. We also have bad debts, which has to be removed. All these are under your current assets. All right, so we have stock. That's one. We have trade debtors. All right, and also we have bad debts. Remember what we said about bad debts? Can anybody talk to us about bad debts? Remember what we said about bad debts? Can anybody remind us? Wonderful, wonderful, yes. Debts that cannot be recovered. Thank you very much. There are good debts and there are bad debts. Good debts are the debt that there are hopes, or you still have the hope of recovering back your money. When it comes to bad debt, probably the person that has owed you the money has died, something happened, or you lost contact, something that there is no way you can even recover the debt. So those ones are called bad debt. And don't forget, you have to minus them as well from your current assets. So we have also under current assets, we have the likes of short-term investments. Don't forget, under fixed assets, we have long-term investment, but under current assets, we have short-term investment. All right, we have short-term investments as well. So we have that as that. So as well, we have under your balance sheet, we also have what we call current liabilities. Current liabilities. Please note all this. Now, when we say current liabilities, what are we talking about? Can anybody talk to us about current liability? What are current liabilities? Can anybody talk to us about current liabilities? What do we understand by current liabilities? Okay, is anybody helping us with that? Okay, what's going on? Why is the comment section? Why is it not active? Why is it not buzzing? Same person again. Wow, thank you very much for that. Miss Tasha. Yes, yes. Financial obligations due within a year. Okay. Current. Yes, it has a short lifespan. Are we all there? Why are we not responding? All right. So when we say current liabilities, they are said to be an organization or a company's financial obligation. Yes, thank you very much for that, Miss Ajuma. Well, I like your spirits tonight, man. Very, very active. All right. Thank you very much for that. So we have current liabilities. They are company short-term financial obligations that are due within 1 year or within a normal operating cycle. Or under your balance sheet, so you also have the current liabilities. So we have and you are expected to have the current liabilities, and even in your current, all right, in your current liabilities, you're expected to less current liabilities. All right, after you have everything, you less it and you put your, okay, you're expected to less current liabilities as well. And under your balance sheet, you are expected to have what we call working capital. We spoke about working capital too in our retrospective classes. Is there anybody who is there to tell us about, remind us very quickly about what working capitals are? All right. You know why I'm deliberate about not just listing all these things out. I'm deliberate about it because these are the things that comes out in the TME. We definitely we promise that we are going to make these TME solutions available for exam study. But believe me, you need to understand the fact that TMA is not just like maybe 60% of the exam questions. Exam questions are still coming out from your materials. And these are the things in your materials. You need to be conversant with them. All right? You need to be conversant with them. So now, speaking of all this, we've talked about them in our previous classes. I'm deliberate about bringing them back just to refresh our memory and to be sure that we still come across this, because anytime we come across this, we can be able to say something or attempt them properly. So is anybody talking to us about current working capital? What is it by working capital? Okay. Waiting for us. Okay. Still expecting a response. Yes, thank you for that. Okay, somebody said something. Now, Miss Ajuma said it is the capital of a business used for day-to-day running. All right, you have a point. Trading, please. Okay, you have a point. And Miss Tasha said minus current liability from current assets. Okay, I thought there was a spelling issue there. Current liabilities, a short-term company's financial obligation from current assets. Short-term, all right. Short-lived, um, short-lived, and we have that as short-lived inventories or cash equivalents. So thank you very much for that, Ms. Tasha. You're absolutely correct. When we talk about current capital, working capital, okay? Talking about working capital, we are simply talking about you minusing the current liability from current assets. All right, minusing current liability from current assets, then you get your working capital. All right, so we have that as that. And so we have also long-term liabilities, just the opposite of short-term liabilities or current liabilities. Liabilities that last more than, all right, a year. So here we have the current capital. After the current working capital, then we have the long-term liabilities. Are we together? Okay, we on the same page? Okay, now let's, so we have, after the working capital, we have the long term liabilities. And speaking of which, we also have method to speed it back. Now have that as that, whereby we have the likes of bank loans. Okay? These are uh, companies' financial obligation that stays more than a year. All right. Speaking of financial bank loans and the likes under long-term liabilities, and with this, all right, we are going to be getting our net profits. Okay, and when we say net profit, what are we talking about? When we say net profits, what are we talking about? When we say net profit, we are simply talking about the amount of money a business earns after deducting all taxes, interest, expenses, all right, incurred. Okay, then we get our net profit. Okay, and like I said, net profits, we talk of net profit as the amount of money a business earns after deducting all operating, right, cost, interest, and tax expenses. Let's just say in a nutshell, all expenses incurred in running the business for a particular period in time. All right. So we also have after the net, um, okay, this is supposed to be net assets. Sorry, not net profit. Sorry, it's supposed to be net assets. It's supposed to be net assets. Okay, not net profit. Please note that after a long term, after your long-term liabilities, the net you are having should be net profit, net assets, not net profit, please. Before we get to net profit, there are still things we need to attend to. All right, so now in net profits and net assets, what are we talking about? Now we have your net assets and we have the net profit as well. So speaking of okay, the network is pretty bad. And can we all hear me? Oh, big then. So now speaking of the net asset, it's said to be a very important part of any business. Okay. Now I just need to explain it because I'm not sure we discussed this in the past. All right. The net asset is said to be very important in business balance sheet. All right, because it is the sum total of everything the business owns. All right, the sum total of every asset the business owns. Okay, minus the liability. All right, the sum total of everything. All right, call it gross assets. Can also be said to be gross asset. Net asset can also be said to be gross asset. All right, and to get the net assets, you do the total of the. All right, we do the total. Remember that this is the fixed asset. This is long-term investment assets. All right. Then we have the current liability, working liability, and long-term liability. All right. So now, when we add all this together, okay, then we have all these added together. Then it is minus. It is minus. Okay, from when this is the total of all our assets, the total of all our liability, then we talk about our net assets because we have done what? We have minus our liability from our total assets, right? Then we get our net assets. Are we together? So we have that as that. Then after that has been established, then we can now talk about, all right, owner's equity, your capital, equity is also referred to as capital. Then we now talk about your capital. All right, talk about your capital for the next year. Don't forget that this is the last day of the year, December. So the owner's capital for the next year. All right, we have that as that, and we'll have as well additional capitals. Then we get our net profits. All right, so the net profit was I was discussing, talking about that is that everything you have earned from doing the business of a particular year, the net profit. And you also have to put in mind that we need to remove every money withdrawn from the business by the owner, which we call them drawings. As the owner of the business, and sometimes you borrow money from the business, we call those drawings. So you also need to minus it from your net, all right, from your net profits. And that we conclude with that on. I think I was even thinking we will be able to cover everything today, but this is just trial balance. This is just balance sheet. I mean that we have been able to cover already. So we'll call it wrap here for today. In our next class, we'll take it up from income statement. All right, that will not take much time. I think the reason why this took a lot of time was because I needed us to understand everything here, asking for our definitions from us and everything. So I'm very sure the next class will not be as okay. We won't take much time. We'll just go straight to it since we've talked about the main things. So thank you very much, everyone. Please let's do all to submit our notes and keep them, send them to the appropriate quarters, as this is very essential. This is monitoring our progress in the class. Thank you very much. Let's have a wonderful night rest, and I look forward to seeing you in subsequent tutorials. Do have a wonderful night rest. Bye.